Hi, thanks for joining me in my market report today. My name is Mike, and if you're new to the channel, my market reports are about mortgage rates. We kind of get into what's impacting mortgage rates on a daily basis. We bring these videos out every day, going over the economic data, going over being released for that day, to headline news, to any comments or whatever is kind of impacting the markets or the sentiment. Sometimes it's illogical things like stocks are selling and putting money into and going to a flight to safety and putting that into bonds, which is what drives mortgage rates. If you don't know, mortgage rates are mortgage-backed securities, which are bonds and traded on Wall Street, which is what creates the volatility of rates. What you don't know probably is that pricing can change multiple times in a single day if it's real volatile. On a non-volatile day, we'll see some slight swings, maybe about an eighth of a percent on a daily basis. But for the most part, they don't really move a lot. But when the market does get volatile, we can see quite a few price changes in a single day here. A little bit about myself is I am a loan officer. I do work with the national lender. If you guys got questions about these videos or mortgage rates, or if you got questions about different mortgage plans or programs out there, we do got quite a few ourselves. We came out with our own physician loan. So if you guys got questions about those, we can help you out with. We're here to help you. We can work with you on your refinances, work with you on your purchases. So if you need that pre-approval and make offers and finance it, we're here for you guys. Uh, Without further ado, we'll just jump right into we'll start off with the economic report. We don't have anything scheduled for today. However, next week will be kind of a big week. We do got a lot of economic data coming out. We got some housing from existing home sales and stuff coming out, to GDP coming out, uh, uh, to even the PCE, which is the Fed's favorite gauge for inflation, personal consumption expenditure, that will be coming out as well. But even more importantly, there'll be a headline news that all investors are waiting for, are looking ahead to, which will start on Thursday, the 26th, through Saturday, the 28th. That is the Jackson Hole Symposium, where the Fed members get together in Jackson Hole, Wyoming. They will be kind of talking a little bit about their annual, uh, about where they foresee things. That would be important because there is talk about tapering. Everybody, all the investors want to know when they're going to potentially start talking about tapering and when that may happen. And if you don't know what tapering is, um, when we went into the crisis, the Fed created to create some liquidity in the markets, uh, where they started buying mortgage-backed securities and treasuries, about $120 billion worth every single month since then. Now, because where the markets are at, they feel that there might be too much liquidity out there, so they feel that they're going to have to start pulling back at some point, creating less stimulus for the economy as the economy is hopefully gets back onto its feet. So they're looking for clues as to when that might take place. So let's jump ahead here, take a look over at headline news, see what's going on for the day. Stocks are finally up. They've been taking a pretty big beating over the past week. They've kind of, since they've taken a bit of a beating, you know, the big hedge funds, a lot of these people coming back in, buying stocks at low ends here. Now, also there was some comments, a comment made by Fed Kaplan, who had an interview on Fox Business, and basically saying we've been given this impression that the Fed might start tapering sooner than later. But because of the COVID, the whole Delta variant, with hospitalizations are up, some more cases, um, potential lockdowns and stuff, this is creating some potential change in sentiment of that tapering. And Kaplan kind of touched on that today, whereas said he might soften his stance on that decision of tapering sooner than later, because they kind of want to see how this plays out. So we may see some patience by the Fed coming in. They may kind of mention that at the symposium, so it may not come sooner than later due to they want to see the effects. So they may want to see a little bit more data before and see how the Delta variant affects the economy, if it's going to slow things down again, as they don't want to pull back any stimulus before we get on our 2 feet, back onto our own 2 feet. So with that in mind, the stocks are kind of liking those comments a bit as well. It's kind of easing the markets. But they will be looking obviously ahead to next week, which will give that symposium even more important, make it even more important. Let's see how this is affecting the bond market, say, and what our rates are doing. As stocks are up, we're kind of taking money out of the bond market back into the equities, and we're down about 6 basis points. Some lenders, because over the last 2 days, may be pricing a little bit worse today, as we lost ground yesterday, as we were up about 5 basis points when we started this morning, and we end up losing some ground. So it's possible you may see some lenders pricing a little bit worse today as a result. 6 basis points alone wouldn't do it, but if we combine with yesterday's losses and today's, that will probably put us in that position where a lot of lenders may come in with a little worse pricing today. Yields are currently at 125, challenging this technical level here. And then, of course, the 25-day moving average is moving lower, so that's going to create a double resistance here pretty soon. But right now, it's kind of testing the technical ceiling right now at the 125 here. All right, folks, I hope this kind of helps you guys out. Next week, again, get ready for some chopping, especially towards the end of the week as the Jackson Hole supposedly going on. PCE will be coming out Friday as well. GDP will be coming out about middle of the week. So stay tuned. We could see a lot of ups and downs next week, so be careful. If you guys got questions about anything, again, please feel free to reach out. We're here for you. We certainly appreciate your views. If you guys like these videos, we greatly appreciate if you can smash that like button. It helps us out. We'll look forward to see you guys on Monday. Thanks so much for watching. Bye-bye.